USD today, and I have seen that price action being upheld, and the buying potential continue. While we have seen a sudden change in the sentiment in the market, haven't seen yesterday economic data report, and tomorrow will be another strong economic docket. Unemployment will be viewed, and the core PPI index will also be evaluated, and all this will give us forward guidance into price movement. And haven't seen President Trump cut off good in his tariff lift. We could be seeing some shift in sentiment, but at the moment, it looks like buyers are digesting it, and we are beginning to see some influx of liquidity into gold ETF, and we are seeing a change in the price. And at the moment, let's look at a key important structure where we have a descending trend line, support become resistance and breakout structure, and we had an interchange. RS resistance becomes support and breakout structure, another resistance before breakout structure, and price returns here as SR, where we have support become resistance and breakout structure before breakout structure. And you look back here, you also see a breakout from a descending trend line, automatically making here a demand floor, and price respected that structure at that level. After breaking out from there, you can see an outright breakout followed by a retest at this level. You will see another break and retest at this level. You see a break and retest at this level, and this is a retest to a broken structure. And we have a descending trend line at this level, and you can see what price has done here. We had here as ROS1, ROS2, ROS3, breakout of RS followed by a retest, and price came back on that descending trend line, and have found um, have found support on 3 hours, and on 2 hours we have a valley structure. And if you make some critical adjustments into the structure of the market on 2 hours, we found a very strong support structure, and that is why you have seen that the price yesterday made a reversal, and we have seen the yellow metal continue. Now, why am I making this video? I'm making this video to correct my earliest plan. You see what happened there? We have a double confluence on that descending trend line. On that descending trend line, we have had, and let me be very much objective. Look at what why price has chosen here. We had demand on double confluence. We have the respect of this structure, a broken supply with price return there as a demand floor at 3331, and we have seen that buyers have leveraged on that structure. And if you go back to 2 hours to look at the ascending trend line breakout, where price has formed a bullish channel, and we had a breakout from that bullish channel, we have yes SR1 support become resistance and breakout structure, another SR level, and another SR level, another one before breakout, followed by a retest at this level. And all these are all informations that we must put into perspective. And at the moment, I was looking at 76, 60 something level for potential reaction, and 84 potential reaction. But from what the market is doing at the moment, and from this closer structure, price could move back into 402 before dropping. You know, trading is probability. So we could have this extension, we could have it extended into that zone, and market pulls back. Yes. So please be very careful. Manage your risk. Manage your risk. Manage your risk. Please manage your risk. Everything they tell you about this space is probability. Everything is 100% probability. Manage your risk. If you manage your risk, you you're gonna go a long way in this space. But without risk management, you aren't gonna go much. You aren't going far without risk management. And let's look at a temporary descending trend line, which also buttresses my point that we could have price fall back into the structure. If you look at it on week to week, so you see that there is a very high probability that price could extend into that structure, and at that level you begin to see a potential drop at 3,400. So it's also possible that price could move in that direction, and it's also possible that there are key levels of resistance to upswing on each of these higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Each of the higher lows are resistance to upswing. Each of the higher highs also are resistance to upswing, because it's already a structure that is broken. But for me, I think If you enter the buy at this level when I called it, and even a buy when I mentioned this morning, you should be in maybe about 100 pip profit. You can close on your trade and allow the market to do its thing. you know so that's what we have for now, as we watch London session match into New York session. I wish you good luck. Stay resilient. Remember, a trader without liquidity is a demo trader. Like a hunter's gun without a bullet is a toy gun. Protect your equity. Protect your equity at all time. Bye bye.